first area that we do have in focus today, and that's the battery manufacturing space in India. And we have Puneet as well as Varsha joining me. Now, globally, the growth in battery demand has grown at a 45% CAGR ever since COVID, and this was mainly driven by the EV expansion. And while China has shown great strides, there's a big opportunity that lies within India. Today's focus is based on an ambit note that states that despite the shortcomings in global headwinds, India has an opportunity to build a strong battery manufacturing space, and ambit says that India's battery value chain can grow at a similar pace that we did see the solar module space grow in. The brokerage has marked some key beneficiaries like Ola Electric, JSW Energy, Amara Raja, Himadri Specialty Chemicals, Gujarat Fluorochemicals, and Neogen Chemicals, which all have seen, positive trajectory in terms of stock movement. Now, I want to just talk about the capacity targets that India has set as a country. Now, India has around 100 gigawatt hours of capacity in terms of the battery capabilities by 2030, and this growth is supported by various PLI schemes as well as the one that was put out for advanced chemistry cell. Now, according to Ambit, the potential investments in the entire space is around $13 to $15 billion. 8 to 9 of these billion dollars for this will be set aside for battery cell manufacturing, while 5 to 6 could come in the midstream capabilities. While there is potential in the upstream capex, but India does have low reserves in terms of lithium, so that's a kind of dragged down. But Puneet, could you maybe give us some light on how the current landscape is in India? Still at nascent stages?
Yeah, very nascent actually, and there's no points for guessing that China is, of course, the largest winner here in manufacturing these EV batteries going forward. Currently, around 60 to 90% of the market share is with companies in China who manufacture these batteries there, and that is what is exported around the world. And India is, of course, one of the key importers as well for whatever the demand has been built up for the electric vehicle scooters as well as the cars as well. Now, India currently only has some midstream capabilities in this current venture. It's also making electrolytes as well as cathodes, which is one of the key raw materials here. But what the major thing is that the smaller players are currently importing these cells to assemble battery packs here. So that's, of course, the first stage where these battery packs get assembled, and then the local manufacturing of these cells happen, and then only in a few years where you can have and set up a proper manufacturing infrastructure from the start to the end for batteries, basically.
Yeah. But let's maybe focus on how companies have identified that there is potential in this space, mainly in two segments that we're going to talk about today. One is auto, one is chemicals. Puneet, I'll start on you. Could you maybe give us some more information on how these auto companies have ventured into this space and in what form?
Well, definitely. We want to talk about three key players here. The first one is, of course, Ola Electric, and we did mention the battery players as well, Amara Raja, as well as Exide Industries, who make huge strides in this battery investments that they've done. Let's start with Ola Electric first. The recent listing up about 70% still from its issue price in just about a couple of weeks since it's listed. And in its first conference call itself, that it had mentioned a lot of updates for its battery venture. Now, they have mentioned that the first phase of phase 1A specifically has been completed, and roughly around 1.4 gigawatt of capacity has come on stream. Now, for financial year 25, they will be using these particular cells to manufacture the 4680 cells, is what they call these particular ones. Going forward, they will be commencing the use of these particular cells of 4680 cells in their electric scooter starting Q1 of next financial year, so especially in the next 4 quarters. And they've recognized, PLI benefits as well for these kind of investments that they've done. So specifically, the second stage of roughly around 3.6 gigawatts of additional capacity will come on stream by February of 2025. This is just, in about 3 quarters. So a lot of major updates to come in. And phase 2 is expected to start by April of 2025. That's another key thing, which is one of the positives about the company. Now, we can't talk about batteries, electric vehicle batteries, and not mention Amara Raja as well as Exide. Both have made huge sum of investments in this particular venture. Let's start with Amara Raja batteries, and what they've done is specifically also tied up with technical players such as Gotion. Now, Gotion is a Chinese EV battery manufacturer, and they have a joint venture, basically Gotion as well as Inobat, which is another company in Slovakia. So now what they will be doing is take this particular licensing the technology, especially of this joint venture, get it into India and manufacture the batteries here. Why is this particular investment significant for Amara Raja specifically? Is that it's fully complementing Amara Raja's efforts to commercialize as well as operationalize this gigafactory now. It's also tying up and giving its LFP technology as well in its prismatic as well as cylindrical technology. And what's key here that they're investing roughly 9,500 odd crores in Telangana for setting up this particular facility. Now, apart from that, there is another total capacity will be around 16 gigawatt hour of total capacity. That's higher than what Exide is also saying. And it will be, for phase 1, will be commercialized by FY26. Now, the final company that we want to discuss is, of course, Exide Industries. It's what it's done is it started investing in a company, EESL, or Exide Energy Solutions Limited, in the last couple of years, starting 2022. Now, they've invested almost 2,600 odd crores in this particular venture till date, and they will have a total investments of about 6,000 odd crores. This will be specifically to make EV batteries going forward as well. Now, the first phase of 6 gigawatts or about 4,000 odd crores of investments will potentially be done in the next 12 months. So we will be seeing a lot of updates coming here. They've also, tied up with Hyundai to manufacture the batteries and supply it to them to make them viable in India. Now, that's one of the key things to look out for. And Morgan Stanley is also positive on the company. They've have a target of roughly around 485 rupees per share. Now, it's lower than the current market price, but there were three key things that Exide had mentioned, and Morgan Stanley is positive on. The first one is that Exide had an early mover advantage, so it started investing before Amara. The second thing is, of course, the addressable total market of 13 billion, which Mihika also mentioned, is huge potential for these two battery makers. And finally, partnerships such as Hyundai as well as others that they will stitch in the future validates the technology and the investments that they've done. So overall, these three key players in the battery venture, specifically Ola, Amara as well as Exide Industries, have set the ball rolling. We will be seeing what other players join in, especially on the OEM side, what kind of investments and partnerships they do going forward as well.
This isn't based on infrastructure, but Varsha, you track the chemical space very closely, and many companies have kind of estimated the market size to be a huge opportunity. Could you first just break down in terms of the market size and the battery chemical components that are important over here?
So yes, so Mika, first let's understand what makes up a battery. So when you say a battery, to make up a battery, we need certain raw materials, certain chemicals, which Puneet just highlighted. So technically, what are the components of battery? You have anode, you have cathode, you have electrolytes, you have separators. So all these chemical companies are venturing into these battery chemicals, battery materials to make up a battery. Now, as you said, the market size, so battery market globally is going to expand over 6 terawatt hours, this is the measure. And then battery materials, global demand is expected to grow at a CAGR of around 25 to 30%. Now, let's see which all are the companies which will make these battery chemicals. So starting out with Ami Organics. So Ami Organics will be making electrolytes additives, again, which is used to make a battery. So they've signed MOU with global manufacturer of electrolytes for manufacturing of electrolytes, and then they've also signed a MOU with Gujarat government amounting of rupees around 300 crores, and they're going to set up a dedicated manufacturing facility for electrolytes. Then we have Neogen Chemicals. They're going to make electrolytes, again used for battery. So they are venturing into electrolytes for lithium-ion batteries, and they've secured agreement with MU Iconic Solution Corporates, which is in Japan, and they've acquired their technology for making up this electrolyte. And they're going to have a manufacturing setup of around 32,000 metric tons of electrolyte, and the aggregate capex is to be around 1,500 crores. Then we have Himadri Specialty. They're going to make cathode. So they're going to make 2 lakh metric tons per annum of cathode. And then we have Gujarat Fluorochemicals as well. So Gujarat Fluoro will be venturing into all of these segments when it comes to electrolyte salts, then cathode and anode. So they've announced a long-term plan through its subsidiary company, and the cumulative capex is around 6,000 crore for the next 4 to 5 years, out of which 3,200 crores will be spent in the next 3 years, and they are expecting 2x asset turnover from this capex, and EBITDA margin is expected around 25% at the overall capacity utilization. Then when it comes to what these companies are expecting in terms of numbers, so if you see in Ami Organics expecting 25% growth when it comes to FY25, followed by Tatva Chintan again expecting 20 to 25% growth in FY25, while Neogen Chemical is expecting rupees 2,500 crore at peak utilization when it comes to battery chemical chemical business, and Himadri Specialty is expecting almost 20,000 crore at peak utilization when it comes to, again, battery chemicals. But this is all about, battery and battery chemicals. But Mihika, we do have challenges when it comes to battery segment overall.
Yes, I think when there's an opportunity for any kind of market, there are certain challenges that come in this. And I'll just go through three key challenges that do. One is raw materials. Now, there are very low reserves of key, basic components in this whole entire value chain. This is lithium, cobalt, and nickel. And India has very low reserves of these. But, that's the case for many players, as well as China, who have been, going and kind of getting more reserves in order to meet the demand. So while we don't have the domestic raw materials, we do have a history of setting up world-class processing facilities. Second is technology. Now, China, Japan, Korea have a massive lead in the crucial technology or tech that is needed in various, processes along the value chain. So India will have to, have more research and development investments in the space in terms of tech, as well as skilling from a work labor perspective. And lastly is infrastructure deficiencies. Now, battery storages do require stable power source. They also require efficient logistics as well as a skilled labor. But we have, scaled and built capabilities when you look at chemicals or metals processing, and despite the global headwinds or the shortcomings. So that's the entire picture on how the opportunity in battery chemicals lies in India. And I want to thank Varsha and Puneet for joining us for this conversation and giving the insights on what companies are planning on doing.